Hello, Maverick traders, and welcome to today's currency recap. It is Tuesday, May 30th. All right, kicking it off with some market analysis here. The S&P pretty much flat on the day. Total World Stock Index down slightly. Crypto just chopping around. Gold rebounds slightly, and oil down quite a bit today. The market is simply weighing the odds of this debt ceiling resolution between McCarthy and Biden to actually make its way through Congress, and weighing the odds of that happening. It would be astounding to me if it didn't get through Congress. Ultimately, I think this is just more grandstanding and just a desire to make the other side look bad, but in truth, it makes the whole government look bad. But like I said, yeah, the odds of this actually not getting through Congress are pretty minimal. I wouldn't say non-existent, but minimal nonetheless. All right, kicking things off with the technicals, not much has changed in my picture of the S&P here. I still think we're ratcheting our way towards 43.22, albeit in extremely choppy manner. And here we've got the US government bonds 10-year yield chart. We're quite a way away from the 20 and 50 period moving averages. We're quite stretched out there, and it looks like we're pulling back now to reclaim those moving averages. Pretty simple. This should be good for bonds, at least over the next couple trading sessions. And then finally, we've got crypto. We continue to trade within this bull flag. Unless we dramatically bust out the bottom of this channel, I'm going to call this a bull flag, which means that eventually we are going to break upwards out of the channel, and I think that is the green light to buy crypto, not before. So in terms of the market outlook here, I mean, technically, I'm going to give this a +2. We're above both moving averages, and the slope is trending positive, but not quite outright sloping higher on both moving averages quite yet. In terms of news, well, today we've got tomorrow we've got some GDP numbers coming out of Canada. We have a JOLTS job opening report as well. And then look out for those German CPI numbers, which could move the euro, of course. And then the big news, of course, for this week is going to be on Friday when we have that non-farm payroll report come out. So moving on now into currency analysis, cryptocurrencies pretty steady. I mean, Litecoin is the major component holding the basket up today, but I wouldn't say major movements on either side. Just not a whole lot to write home about here. In terms of fiat, the yen and the pound did well, which is a little bit strange to see that. The dollar mostly flat, and then the euro was up a little bit. The Swiss franc was down a little bit, but the biggest loser on the day on a relative basis was the Australian dollar. The Canadian dollar also flat, and the Kiwi dollar just down a little bit as well. Now, in terms of velocity, things are pretty tight. We've got a couple +1s here, given the yen and the pound's outperformance on the day. It's not surprising to see their velocity outperform on a relative basis either. And then on the negative velocity side of things, we have the Kiwi, the Aussie, and the Swiss franc. Now, I think it's going to be a little bit more interesting when we hop into the actual price charts here, so I can show you what's going on. So although the yen has a positive velocity score, the yen's just been in a downtrend, and it's hard for me to see a good long yen trade here just right now anyway. Ideally, we just base, and then eventually we break down on that base and test the next support level, which, as you can see on the daily chart, coincides with the bottoms from October 22nd and the bottom from October 21st, 2022, and from September 13th, 2022. So that would be the ideal scenario here. I'm looking for this price action just trade sideways, base, and then break down. In terms of the dollar, kind of a similar situation here. It looks like we're trading sideways. I think we have at least one more push up here to perhaps double top with that March high. But it'll be interesting to see whether we can break through this resistance area or not. Swiss franc, negative velocity today. It is possible that we trade back and we could be in the early stages of a developing range here. I don't love trading ranges, but I would keep an eye on this range I've just sketched out here. On the lower end of the range, we have the lows from May 11th. And on the high end of the range, we have the high from May 3rd. If you really wanted to short the Swissy, we did crack through this trend line. If you see a good setup in the Swiss franc, I just make sure that on the basket, we stay below this trend line. I think that would be key to any further Swiss franc weakness. Okay, so the euro, just kind of bouncing and chopping between levels right here. We're in this deeper support area, and we've bounced out of that. We've tested this intermediate resistance area again, and I'm curious to see whether we trend lower. I think that's the more obvious path for the euro here, just based on some very quick Elliott wave analysis. We need 5 waves to complete a market cycle. And to the best of my ability, I can only count 4. So we have 1 here, 2, 3 down, and then we have a pattern called an expanded flat for wave 4, which means we should see a 5th and final wave take us lower in the euro before we get a larger bounce. Okay, the pound. So we've reclaimed the trend line, and I think we can redraw that trend line now as a result. And the pound marches higher. I think right now we have this resistance area, which is very important, and I fully expect the pound to top out when we reach this area. It's the tops from February 2022. We also topped out here in July 2021, March 2020, December 2019, and March 2018. So this is a long-standing resistance area. Pretty clear we're going to go up to test it. And I think buying the pound on the way up makes sense, and I think shorting it heavily, provided a reversal setup appears once we're in that zone, makes a lot of sense as well. All right, Canadian dollar. We continue to break out of this range that I've been pointing out in the last several weeks. And yeah, not much more to it than that. I'd say any pullbacks into that range ideally will be treated as support, and I'm looking to be long the Canadian dollar so long as we stay above this resistance area. From a chart pattern perspective, we also have a nifty little head and shoulders pattern that's formed here. Here, I'll sketch that out for you guys. So we kind of have like a left shoulder here, the head, neckline, and the right shoulder. So I do see a little bit more upside here in the loonie. The Australian dollar, it's a choppy mess, but generally speaking, we're just trending lower here. I think the next major test is going to be this low from December 2021, and we'll see whether or not we can break below it. If we can, it opens the door to a much weaker Australian dollar. And then finally, the New Zealand dollar just ran into a brick wall. I mean, it had such a positive start, and then it just reversed completely. This wedge that we've broken out of hasn't been completely invalidated, but it's on very thin ice. If we take out 68.18 to the downside in this basket, then the wedge is invalidated, and we're going to look at a range of support between 67 and 66.25 or so. All right, that's the currency analysis for today. Now, conclusion stays the same. It's the same message. Volatility's low on a relative basis right now, so the focus should be on fewer trades, not more. Quality over quantity traders, 100% for sure. Be hyper-focused on velocity for any trades because you need that juice in the market in order for the trade to be able to take off in any direction. And as always, follow your trading plans. Pay attention to proper position sizing. That's it for me, folks. I'll see you soon.